All right, so we had a crazy week in the markets. We started out very well. S&P, NASDAQ both hit an all-time high as recently as Thursday, and then some stuff happened on Thursday. Trump obviously imposing tariffs on China spooked the market to a large degree. Bitcoin had a massive crash. I think it might actually have been its largest crash, at least dollar-wise in history, not percentage, but dollar-wise. So I want to talk about that. I want to talk about the stock market. First things first, if you get value out of the video, please like and subscribe. As usual, check out the links below. So let's get right into it. The big news from the week certainly was Trump with the tariffs. This is from Unusual Whales. Trump announces additional 100% tariff on China and export controls on any and all critical software starting November 1st. So he basically went on this long rant on Truth Social. I won't read all of it, but China controls, I believe it's like 80 to 90% of the rare earth metals on the planet, and that's something that certainly is concerning. Now, would I go about it by putting on 100% tariffs? No, I definitely wouldn't. So it's kind of a hard situation to weigh in on. But the one thing when it comes to the markets, that's what we're worried about, is the markets obviously reacted very negatively. It was the worst day, at least for the S&P and the NASDAQ since April, obviously related to the same stuff. And like I mentioned, up until about midday on Thursday, the S&P and the NASDAQ were at all-time highs. So we were down about 2.5% on the week, but we were actually up slightly up until Thursday. So NASDAQ was down about 3% even, and international markets struggled. The equal weight S&P struggled. So small caps were down over 3%, even mid caps. So there wasn't really anywhere that performed well this week. It basically was just a matter of how bad did you perform. It's not a matter of if, it's a matter of how bad. So that was the basically the recap there. But when it comes to the stock market here, we've already seen this game. Now, again, this time it could be a little bit different, but what is the most likely scenario here? The most likely scenario is, Trump said, yeah, there's no reason to talk to Xi. I'm not talking to Xi. But now there's reports that, yeah, they're going to talk. And frankly, I think it's only a matter of time until they do talk and figure something out. Now, chances are they still end up with tariffs, but it's probably not going to be as bad as what we think. But again, when it comes to geopolitics, a lot of countries are in tense situations. And frankly, as a population, we've really dug ourselves a hole, right? People refuse to vote for a government that runs balanced budgets. People, refuse to learn economics. So they get played, right? They get played. And the ending factor is you get stuff like this, right? You get stuff like this. And you get governments that either just roll over, or you get governments that they focus on tariffs. Well, again, there's better ways of going about this kind of stuff. The problem is we've dug ourselves a hole so deep that it's going to be very hard to get out of it, right? And frankly, that's where Bitcoin comes in. But it's going to be very hard to get out of it. But when it comes to the stock market, right, that's what we're worried about. I'm not worried about the stock market. Now, again, short term, absolutely, we could see a lot of volatility. We could see, another, 10, 15, 20% pullback. We might already be, in the early stages of that. But again, at the end of the day, they figured it out last time. That means chances are they'll figure it out this time. And even if they don't figure it out, governments, the only way they can continue to function is to continue to run these massive deficits, which is going to be positive for the stock market, right? People think that, there's a saying that's going around is that, the old saying is, the stock market needs the bond market more than the bond market needs the stock market. And nowadays, frankly, it's the reverse, right? Because, governments need asset prices to go up, number one, because that's such a large percentage of tax revenue. And number two, it's such a large percentage of people's wealth, right? Imagine if the stock market and the average price of a house went down 50% tomorrow. That would be absolutely devastating. Like that would be absolutely devastating, right? I mean, people would go homeless. Like we'd have, well into the double-digit unemployment. Like a lot of people would not be able to retire. If they were retired, they might have to go back to work, even though there's a horrible, economy. That would be terrible, right? That would be terrible. So what do? Well, they're just going to keep printing money. They're just going to keep running massive deficits, right? That's how it's going to work, because people will never vote for. They're never going to vote for change that's significant. They might vote for change, but they're not going to vote for change that's significant. So again, my prediction with the stock market is, barring a collapse that is like Great Depression, like collapse, which again, governments, they're not going to allow that. Right? It's extraordinarily unlikely, right? That, a collapse like the Great Depression, a collapse like even 2008, they won't allow that. They will do whatever financial engineering, whether it's QE, whether it's this or that, lowering interest rates. They will do whatever they have to do. They will do, whether it's, the BTFP, like some incentives for banks to lend more. It doesn't matter what they'll have to do. They'll do it, because that's the only way they stay solvent. That's the only way they stay relevant. So again, short term, when it comes to the stock market, I certainly think we could see some volatility. But for all we know, Trump's like comes out next week and he's like, "Yep, we came to a deal. It's not as bad, and it turns out it's not as bad as we think," and the stock market rips up again. But for all we know, he also comes out and like, "Yeah, I'm going to be super hawkish," and we pull back. But the one thing I'm fairly confident in is long term, money printers going burr. Governments are going to run large deficits, and not to mention they need asset prices to go up so they can so the bond market doesn't blow up, right? The bond market needs asset prices to go up so it doesn't blow up, right? If asset prices don't go up, who's going to fund the bond purchases? I mean, technically the government could come in, but they can only come in so much, right? They can only come in so much. So when it comes to the stock market, honestly, trying to predict the next week or two or even the next month, anything could happen. Like if someone told me, hey, we're down 20% a month from now, I could certainly see that. Someone told me we're up 5-10%, also could certainly see that. There's a very easily predictable outcome for both of those, right? So the best strategy, in my opinion, continue to dollar cost average and ignore the short-term noise. Bitcoin, like I mentioned, the stock market was, it at its worst week and worst day for sure. I don't know about worst week, but worst day since April. Bitcoin, its largest ever drawdown dollar wise in history. It was about 13 to 15,000. I don't know what the exact number was. It went down from I think 118, 119 to start the day, maybe even 120, and it hit at like 105 or 106 at one point. Now again, it shot right back up. It's back around 111, 112. So we're kind of hanging out right where we were a couple weeks ago, which again, that sucks. Obviously, we were just at an all-time high. But again, when we see, let's just basically go what Adam Livingston says here because he sums it up good. Yesterday's purge was the biggest leverage capitulation the asset class has ever seen. Bitcoin proved to be relative safe harbor, dropping 10 to 12% versus 20 to 40% or worse for major altcoins. Market dominance climbed towards 60%. Long liquidations outnumbered shorts 8-1. A single HTX order burned 87 million. So again, a couple important points here. When you look at market dominance, basically what he's describing there is the percentage of the market cap of all cryptocurrencies in Bitcoin, right? So right now, it actually went over 60% on Saturday. I don't know what it's at right now. Obviously, this is going to be recording the night before, but whenever Bitcoin goes over 60%, usually it's a good sign. And I mean, I think we're going to trend higher. I mean, I think we're going to eventually it's going to be 70%, it's going to be 80%, it's going to be 90%, right? Because of all the altcoins, none of them have, I mean, I wouldn't go as far to say they don't have any value, but I definitely would say none of them are even in the same hemisphere as Bitcoin. right? Not even close, because the value of the altcoins, I mean, frankly, it's almost all hype. It's almost all hopes and dreams, or just straight up lies. But when it comes to this is very important because the market dominance of Bitcoin went up. What does that mean? That means that the altcoins, on average, dropped significantly more than Bitcoin did, which again just proves that Bitcoin is the best, right? And the other important thing here, the more important thing is, again, this was the largest leveraged capitulation ever, right? Ever for Bitcoin. Now, again, I think it had a day back in like 2011, 2012, where it was literally down like 50% in a day. So this wasn't the largest percentage drop, not even close. But as far as absolute dollar terms, it was the largest ever. And again, it's just fine, right? It's just fine. Not to mention, like, we corrected down to prices that haven't been seen in 2 weeks, right? Oh my God, it's the worst thing ever, right? So this is, even though, again, it sucks that we're not, climbing to new all-time highs. I thought we'd probably be at 130 by the end of this week. But again, obviously it's disappointing. But again, you got to look at the positives, I think. And the positives are pretty obvious in that we had this massive blow-off and we're still fine, right? We're still fine. And again, if I told you that Bitcoin was at, 130 next Saturday, I don't think anyone would be like, man, I'm shocked. I don't see any way that could happen. And another important thing too here is that if Bitcoin can go down $10,000 or $15,000 in a day, who's to say it can't go up $10,000 or $15,000 in a day, right? And I think that it's only a matter of time until we start to see some of those candles. Now, again, it could be years away, but I think either way, it could be months, it could be years, it could be days. But I think it is only a matter of time until we see that. Michael Saylor, another major milestone in Bitcoin's institutional adoption. So Morgan Stanley is opening the door. And again, this is just that slowly but surely narrative that I point out all the time, is that, again, they just slowly but surely keep opening things up. BlackRock's doubling down. Even Vanguard, they were super anti-Bitcoin up until very recently. They're starting to capitulate a little bit. So again, we're going to see adoption, but I think it's going to be really slow, right? I think it's going to be really slow. Number one, because as I've said a lot before, I don't think the majority of people will ever own Bitcoin. A lot of people say, yeah, we're going to have this, hyper Bitcoin up and everybody's going to have it. Everybody's going to use it. I don't believe that, right? Because what I've said time and time again is when you look at real estate, when you look at stocks, like, that has been a tried and true way to preserve your purchasing power for the last, 50, 60 years, even longer, but at least that long. And yet look at how many people own real estate. Look at how many people own stocks. Like, it's not that many, right? It's actually a pretty clear minority, I believe. Now, again, technically people own them through like pension plans and stuff like that. But I'm talking about you're doing it yourself, self-directed, or at the very least, passive indexing. Like, that's, if I was guessing off the top of my head, what's maybe 20%, maybe 30%, if that, right? So if that few people have or own stocks, own real estate, again, Bitcoin is going to perform better. I think that's true. That might draw in people, but still, my whole point here is the majority of the population, or at the very least a significant minority, are either just not smart enough to figure out reality if their life depended on it, or they don't want to admit they're wrong, right? This is something that isn't talked about nearly enough. There's so many people that don't want to admit they're wrong, right? They heard about Bitcoin, 3, 4, 5 years ago or longer, that they don't want to admit they're wrong, right? They're going to pretend it's a Ponzi scheme when it's $10 million a coin, right? So it's going to keep happening. But again, my opinion is, get on board before. I don't think it's ever going to be too late. So I wouldn't say get on board before it's too late, but I would say you really have nothing to lose at this point, right? I mean, it's a matter of, the classic, do you want to buy at 100,000 a coin, or do you want to buy at $1 million a coin? Because you're probably going to buy at some point. And again, speaking of that, Anthony Pompliano, everyone is bragging about the S&P being up more than 100% since 2020, but it's actually down 88% when priced in Bitcoin. So again, Bitcoin is up about 900 to 900. It was at 1,000, I believe. But again, the recent pullback, 900, 950% over the last 5 years. Now, again, do I think that that's going to continue long term? No, I think we are going to see some diminishing returns. But the good news with that is I think those diminishing returns will bring a little slightly reduced volatility, but they'll also bring, less pullbacks, right? And lower pullbacks, right? Rather than seeing 70, 80, 90% pullbacks, we're going to see, 20, 30, 40% pullbacks, right? Your traditional stock market pullbacks. And I still think I still think Bitcoin's going to return 20, 30% a year over the next decade or two. I mean, not to mention too, I mean, you just look at the halving schedule and stuff like that. Like that alone is like, okay, the demand just has to stay where it is, and the price is going to go up significantly, right? So the main point here, though, is again, you look at the S&P, right? The S&P has done a phenomenal job preserving your purchasing power over time, but it's still getting absolutely destroyed by Bitcoin, right? It's getting absolutely destroyed. And why is that? Is because Bitcoin is the best store of value we've ever seen. And it's only going to get better, right? It's only going to get better because the halving cycle, right? This is something that people don't seem to realize, right? I mean, it's crazy because most people probably have heard of Bitcoin, but I've seen a lot of these really big Bitcoiners, some of these people that do like interviews and talk to people in public and stuff, and a common thing you hear is you wouldn't believe how many people that don't know that the amount of Bitcoin that will ever exist is a fixed amount, right? Very few people know that, and this is what separates it from everything else. Right? This is what separates it, right? Gold, right? The price, gold, we're constantly going to find new gold. That is something that is guaranteed. And when we stop finding it on Earth, we're going to be able to find it somewhere else. But again, we're never going to be able to get new Bitcoin, right? We're never going to be able to get new Bitcoin. And that is what separates it from everything else. Now, again, there's other things which I won't get into because that would be a very long rant, but that is the main thing that separates it from everything else, right? You can build more houses, how they can build land nowadays, right? Now again, people say, oh, there's, some pristine spot in some nice, beach area or whatever. But yeah, that's true, right? But I mean, technically they can make beaches. They can make some of these places as well. Again, it's very, very hard to do that, but technically they still can do that, right? But the question with Bitcoin is we know it's never going to be debased, right? We know that. So that's the big thing. And that's why it's beating the S&P, and that's why it's always going to beat the S&P. From Joe Burnett, responding to Watch Your Guru, S&P launches new crypto index consisting of 15 cryptos and 35 crypto-related stocks. So, and again, this is Joe Burnett. This is a very positive sign that MSTR and other Bitcoin treasury companies will eventually be added to the S&P. Again, I think that it's only a matter of if, it's not a matter of when. And I mean, something that's important to point out that I have pointed out before is a lot of companies in the S&P, it takes them several tries to get in. And I mean, I think the number is around 30 companies were eligible to get into the S&P, and only 2 of them did. So this is something that, again, it could easily take a year or two, right? It maybe even 3 or 4. But it's going to happen, right? I mean, it's going to happen. It's only a matter of if. Like the value of strategy is going to keep going up over time. And I mean, when it's let's just say hypothetically, it gets to I think it's only a matter of time until it gets to $1 trillion market cap. There's no way that they're going to be like a top 20 or 30 company in the world, and they're not in the S&P. Like, it just doesn't make sense. So it's only a matter of time until they get in. And the fact that they have these new indexes is just going to mean more capital, more money is going to flow into MSTR and into some of these other treasury companies, which means it's just going to be harder for them to ignore, which means that it's just more and more likely over time. And again, what happens when they do get in, right? I mean, I've seen numbers that show that like 20 or 30 billion dollars of capital would have to flow into MSTR basically overnight. I mean, that's like a 10% gain right there. maybe actually it's a little bit more because their market cap is what, like 100 billion. So that would be like a 20% gain roughly, right? So that would be amazing, right? And not to mention too, how many people, right? How many people that their way of investing is I just buy a certain amount of the S&P every month, every week, whatever it is. There's a lot of people out there. There's millions and millions of people that is their investment strategy. I just buy the S&P. And what happens when strategy is in the S&P? That's when I think we get another, 500% gain in, a year or two. I think that's very much in the realm of possibilities. And the last thing here is Bitcoin is up over 88% since OSU graduate Chris Pan gave a commencement speech telling everyone to buy Bitcoin. The crowd booed him that day. And again, this kind of piggybacks off my hypothesis that I don't know if the majority of people ever will buy Bitcoin because so many people just are not smart enough to figure it out. And on top of that, there's so many people that they're smart enough to figure it out, but they're never going to admit they're wrong, right? I mean, look at how many people look at how many like financial advisors and those kind of people that, again, obviously they're smart enough when it comes to finance to figure it out, but they don't recommend it. Why is that? Now, again, technically some of them might be, barred from doing it for legal purposes, but again, why not like, hey, 1 or 2%, right? Start with that. And I mean, a lot of people talk about that within the Bitcoin space and scoff at it, rightfully so, because it should be way higher in my opinion. But 1% of global assets is about $10 trillion, right? So that's still, a 5x from here, even if 1% of global assets get into Bitcoin. So, and not to mention too, this piggybacks off my other point in that I don't think people realize just how much more room we have to run. A lot of people think that again, put $10,000 in and turn it into millions of dollars. Those days are probably over unless you're willing to wait a long time. But I still think that if you're willing to put $100, $200, $300, $400, $500 a month into Bitcoin, and you're in your 20s, you're going to be retired in your 40s, maybe even sooner if you can get more. So that's what I think, right? That's what I think. And again, there's so many people that don't want to admit they're wrong. This being a prime example of that. Like how many people that supported this, though it's so stupid, be like, hey, I was wrong, right? I mean, very few people, right? Very few people. And that's just the way that it is, right? That's just the way that it is. So my opinion, don't ignore it. Don't ignore Bitcoin because it's going to keep going up. Doesn't matter. It does not matter. It cannot be stopped. It's not going to be stopped. Again, look at what I said earlier. There's no way that BlackRock is going to be, this is a company that has over $10 trillion in AUM. There's no way that a company like that is doubling down and it's not going to go up forever. There's no way that Morgan Stanley, one of the largest investment banking companies out there, maybe even the largest, there's no way they're opening up the doors and it's going away. And if it's not going away, it's going to the moon, right? So anyway, I've actually gone on long enough here. I just noticed how long it's been. So if you liked the video, please like and subscribe. Check out those links below and stay tuned for more.